I was just thinking about a couple of boards I'm on where you have late stage investors who their worldview is radically different than the Series A investor and radically different than the seed investors. If we get a haircut of 50%, which is literally in one case what we've experienced, well, that's going from a $5 million to a $500 million valuation instead of $1 billion. We still feel pretty good about our investment and we want to keep working on it and growing the company. And then people who invested at $1 billion, they're kind of looking at this, wondering if this company's ever going to hit that mark, and maybe they should sell the company. And because they have provisions, protective provisions, as you pointed out there, maybe they're willing to get a push and just get their money back and then move on to the next bet that's not as convoluted. The number of shutdowns is very real, but I think one of the things, Bill Gurley, that we saw, and I don't know if you saw this, was the never-ending bridge round, the never-ending safes, the never-ending extension of hope. And when you talked about people taking on risk and people having hope and having positivity, there's so much emotion involved in this. And when you lose 5 or 6 hands of poker in a row, when you are in that negative zone, man, you just feel like placing bets is really hard. When you've won, conversely, 3 or 4 in a row and you're on a heater, man, you may get loosey-goosey and be betting on things you shouldn't.